learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in on May 29th, 2020, and the stock market is not going to go crazy tomorrow. I know you were expecting it, but maybe if I say it's not going to go crazy, then maybe it will. So now, you just don't know what to think. But the point is, there is a lot of stuff tomorrow, but we were expecting stuff with this China stuff, or at least I was, but I think I know how it's going to play out. I think we're going to get craziness pretty much with what we have seen all week, where you're going to get these kind of volatility spikes, but not craziness in the sense of some 10%, 7% drop or anything like that. But watching the ranges is going to be important. But we saw some craziness here at close today. The market was down in the morning, then it got strong throughout the day, but then it sold off here off of two specific pieces of news. It's the social media ban or the restrictions or the executive order that Donald Trump put out today. I'm going to go over all that, explain it. We saw some of that after hours, but then at the same time, Trump has confirmed the press conference for tomorrow regarding the action he is going to take on China. Now, I have an update on it, which is pretty much the reason why the market is not going to go crazy. So we're going to go over all of that. I have the plays for you. I have some specific companies I need to be looking at specifically for frogs, which is option contracts that lag behind the price move. So we're going to talk about that. I want to watch those. We made a few different plays today, and you could even kind of see the strategy of how we're going to go about it. But I think tomorrow is going to be a social media stock day again, as well as some of these China stocks. But I think most of the action is going to come into next week. So I hope you guys are ready, but let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, ask about the plays, maybe meet somebody new. Maybe you just, you could just learn something, and we love you. So keep it positive and respectful. Shout out to Chad, baby. Telling you, man, this China stuff gets me stoked. But right off the bat, the first thing that we're going to talk to, there was the plays, but the social media executive order and the China conference tomorrow, because we saw the market react to that. Now, there is something happening after hours as I'm shooting this video. I'm not too sure what it is. I'm sure I'll find out by the time we get into the plays, but I'm going to skip ahead to the China part to give you this, and then we're going to talk about these 230 actions and what that executive order was. But pretty much the market didn't like the press conference news. It started to kind of price things in because, again, we don't really know how to take this. We don't know what he is going to do with China, whether it's going to be stuff like removing Hong Kong exemption status or if it's going to be something much bigger. But market didn't like it. We don't know what to expect, but it might not be the biggest swing. So what I'm trying to say with this is that we've seen this last time, even the other day, literally 2 days ago, when the House passed it, the market went up after hours on that news. So really what I'm kind of expecting, I think the market will react to this social media stuff more and some other actions and what develops from there. But we are going to respond to the China stuff, and you'll see the China stocks go down once China responds back. So that is where I'm saying I don't think the market's going to go crazy, and I think we'll see this next week because whatever Trump does, I think the market isn't going to react too heavily to it. But the question is going to be now when China hits us, and it's not like, when we control the blow, the market likes it. Every time we've done something and it seems like it'd be negative, we are the one who initiated it. So think about that. If something happened to us and China does something to us, I'm expecting that to be the catalyst that is going to start all of this China back and forth trade stuff, and the markets will begin to price that in. So there is that, but now coming back to this executive order, it was aimed at the 230 protections. These are the legal protections that these social media companies have, and he went after deceptive business practices. So there was kind of 2 points to this, and I'm wrapping all of this up and going to summarize it for you, but a few key takeaways that he said, and it gives you an idea of what could happen, or again, how the market could price this in. He said it's tantamount to a monopoly. This is Trump. And then in like a little question back and forth, he was explaining bias and the people who own it, and how one of the people who is on the board of Twitter or something was like doing some crazy stuff, or they had a real bias, and they would say stuff. And he pretty much said that Twitter should be shut down, and he said he's going to look into the legality if he could shut down Twitter. So take that however you want. Again, how serious that could be, whatever his authorities, maybe it just makes you mad and you talk about it. I don't know, but I'm going to look at Twitter to see how that's reacted. Again, we still have that play. But the main thing from all of this, though, they're going after the 230 protection. Now, this is what makes social media companies not liable for what goes on their platform. And then this is what Barr said, the Attorney General. He was comparing it to when it first started back in the day. It was like for message boards. They're saying like, if somebody posts something on a message board, the message board company is not liable, but it only protects you. And this is the point and why this is important to focus on, because we could see the direction this is going to go to, how they're going to try to affect these companies. And now, why is that important to us? How is this going to affect the companies in general, both valuations, how is markets and investors going to price it in? And what will this mean for even profits for some of these companies, or even if they get canceled and policy makes it where they can't engage in business? Again, we're considering all possibilities here. But the point that they're going after, they're saying that if you want those protections, you have to remain neutral. So the minute you censor, the minute you edit, the minute you do anything of that nature, you are essentially becoming an editor, and now you are a publisher, as opposed to giving a neutral forum where everybody could post whatever they want. So now what is going to happen? What are they trying to do? Again, this executive order was very confusing all day. We did not know really what the contents are, and we still don't know. They're sending it. They're going to try to get state legislature. They're going to have to create stuff, but the point is legislature. They're going to legislate and draw now specific rules to enforce this, because think about everything we're saying. There's a lot of questions to this. So pretty much the legal rules and policy to how to enforce Section 230 in today's day and age, they're going to start legislating and now defining things with hundreds of pages to say, this is what is going to make you an editor. This is what is going to make you a publisher. Because right now it's a pretty broad term. So these are the actions they're going to be making. So now this is, if a little political lesson, or as far as political economics, you want to look at now what's going to happen. This is interest groups. People are going to lobby. People are going to have this, or again, whichever side has an interest. It's not always about money here, because now you see different interests are going to get represented. So people who have their interests represented by what is on social media, whether they're an investor, whether they use it to advertise, who knows, they are going to compete to get the best draft of these rules to be able to say, okay, this defines this as a publisher or not. So we're going to see more from this. This is just the beginning, but this is enough to probably, and again, as more of this comes out, we're going to start seeing what those rules could start to outline and what they want to do. And pretty much the attitude that Trump has had, he said, is that they're going to get something out of this. Pretty much they're going to get some definition in writing and just make it more strict. So even if they don't get to do it, it's going to be reining in some of that power. And also now another big point they went on was saying that a big part is they want to ban federal agencies from buying any ads on these social media platforms. And this is going to hit Twitter a little bit harder than any of the other platforms. I don't know how much Snapchat will get affected, but there's a lot of political spending through some agencies and all that through these social platforms. So even Facebook is going to get affected by that. But you could already see now stuff like this. And if a policy or rule or one word in the definition of how they're going to enact this, there's going to be winners and losers. And that is what we're going to see. And that's what the market is even going to start pricing in. And we're going to see that through companies. So even from this, I'm going to be watching the social media companies. I'm going to be watching Facebook. They're going to lose. I think Twitter will be the biggest loser. And then we talked about it today on stream. I think Snapchat will be a winner out of this. I think they haven't really engaged in any of this stuff. So pretty much they will retain a lot of that liability protection. So now some of these other companies can lose liability protection. That's going to open them up to legal risk or spend money to prevent all of that stuff from happening. But now also too, who's going to get killed? Who has the most political ads right off the bat? That is going to tell you who is going to be the biggest loser out of all of these companies. So that was the most important thing. We're not done hearing about it. It was a little bit vague today and we got more information, but that is going to be important. That's what we're going to be watching. And like we said, tomorrow, that press conference is going to be important. We're going to see how the market reacts, but I think the real move is going to come from China. But I put it in the title. I'm saying this. If I'm wrong, we're going to get an exciting day, baby. So that is pretty much it. I hope you guys are ready. I hope you got to learn something today too. And I hope you just stay tuned with all this. Stay up to date with the news and all that and keep your head in the game and get those long-term portfolios. But let us get into the plays. So right off the bat, I made 3 different plays and I'm looking for one tomorrow. We talked about it. It's the Shop Spotted Frog, Shopify and Spotify. I'm looking for frogs. That's what we talked about, but these are going to be the ones that I'm looking to play that I have not made, and I think they're going to move big. And really what I'm going to be looking for is Friday. It'll be a gambly type of play because I'm going to be trading daily, so you can't do this on Robinhood. Again, if you don't know what you're doing on this, in general, this is my diary. Option trader, personally, think a wonderful thing. So please, I'm documenting this, but I like to go for some of these, and what I like to look for, again, it's not always there, but the idea is to see volatile stocks that can move a lot. Shopify and Spotify, and Shopify still reacting to earnings, all-time highs. Spotify, the news from last week, all-time highs, IPO. So I'm hoping that the contracts will get to the depreciation. We push them to the wall. They lose value because they're expiring tomorrow. But if that stock starts to move or there's any news, those are going to be the companies I'm going to eye for contracts that will be cheap yet close to the money. But it is gambling and very, very dangerous, so be careful. But as far as the plays I made today, I was very bullish on Boeing in the morning, and I had all my hopes and dreams crushed. Those actually went down. I think we lost like $80. It was like a $300 position. I got Boeing June 19th, 205 calls at 5 cents for 6. I got 5 of them at 60 cents, and I talked about it yesterday. I made sure I got some time on it. I thought it was bullish. They're at a good point. I thought that news was good, and I also thought that there would be a lot more market exuberance, and with some of the rotations and trends there, that Boeing would get a little bit support and kind of would have a little breakout there, or at least some momentum from just people going crazy. But there was stuff in the market and that didn't hold up, so we lost some money on that, but I'm going to be holding that. Went a little bit bigger. I should have kept it a little bit smaller, but I was listening to my song and then I went crazy. No, but I still like it. I think that one's going to be, again, and the fact is Boeing could move a lot, so I want to get in. We haven't played in a few weeks. I like to get my hand in the cookie jar in there, but like I said, I could have went a lot smaller. Then these are the next 2 plays, and these could identify some strategy for you. And what I mean by this is you guys have been seeing me go after these China stocks, and then you're seeing how this news is hitting today a little bit. Even Facebook in the morning, I bought a June 5th and next week $200 put, $37. I bought one, $30. Held it. I was down on it, but then this volatility picked up, and then it came back. I think those are double now, or up 100%. But the idea is you could see is how we could hit it day by day, or like every other day you go small, $30. But then once the news starts developing and you get an idea, and then now you're not paying too much for IV, you could really start to kind of scale up with there, do whatever you want from it. But it protects you, and we talked about this today. You usually have enough. So again, even though it's getting crazy like this and stuff picks up and there's news, instincts versus urges, you could do a lot with some of these smaller plays. So again, I'm even doing that myself because I'm going small and throwing a little. If it works, great. If not, it doesn't hurt us too much. But then if these theses start to play out and I'm starting to see it and I could get an edge, then we're just going to start hitting it and being able to go a lot bigger. So I got those 2 plays. I like them. I grabbed the Facebook again in the morning with the social media stuff, and then Intel grabbed a 59.50 put at 31 cents. But why I grabbed them was because today, and I think I grabbed most of these. I grabbed all of these on the E-Trade here. You can see those are all the trades. And then I made one more. We'll talk about the Costco on the other account. But as far as the Intel, what made me decide to get it was the fact that chip makers were selling off. Someone brought it up. They said something. They was totally off context, but I started looking at it. But I made the play first because they started slipping, and I noticed this throughout the day. But all of the chip makers, I mean, there's Intel. I got to get you. AMD, they dropped, 1.78%. NVIDIA was down 1/4%. Intel, and what was the other one? I think, Micron. That's one we had yesterday. And remember, they had the good guidance. They dropped 5%. So chip makers were really, really getting clapped today, which was weird because not all of tech was losing unless it was the social media company. So I said, well, they could kind of get it. Someone asked why I got it. I said pretty much collateral damage. So if there's anything with this China conference or anything with the social media, whatever it may be, they're a slow mover. The contracts are cheap. But then what I'm also thinking that the chip makers were all kind of moving a little bit weird. Again, I mean, even if you look at the long term, I mean, they're really up there. Micron's really up there, and they could really, really sell off quick. Intel. But again, actually, even same thing with Micron too, all of the chip makers. But it caught my attention, and I'm viewing that as a collateral damage play, and it's just cheaper to even get into some of those, and they're slow movers. But there was that, and then finally, the last play we made was a Costco strangle. We went both ways. They had earnings. Next week, it meets the criteria again. The title for that video is How I Turned 160 into like 1,600 Trading Tesla. There's an earnings strategy, and the idea is to be able to spend like $50 to $60. So you spend like about $100, $120 both ways, and it's finding the contracts that have a decent probability. These are about like 20% probability, but there are 2 standard deviations with the money. So Costco dropped. The puts are going to hold up a little bit better, and if there's a continuation, that'll be good, but we're going to lose on that. But if anything, we'll probably break even by tomorrow on that, but I'm still going to be holding that one through. So 100 something bucks. I like that. And then that is pretty much it for those plays that we made today. As far as tomorrow, like like I said, Shopify, Spotify, I'm really going to be looking out for those. Again, you will see the frog, so be on stream. We'll talk about it. Then CRM, they had earnings. They dropped again. I'm going to be looking for continuations. We had that play in the random account, but that one's probably going to get clapped. Costco, like we said, the Baidus from yesterday. Then watch UPS. They had news, UPS and FedEx. They started running up throughout like the middle of the day news that they're going to be raising their prices. So the market like that, again, they did good in transports, has even done pretty good this week. Snapchat, they did really good throughout all of this. Again, they total opposite of all of these social media companies, and they were even mentioned on CNBC earlier throughout the day, and they got a little bit of pump there. So we know, we got these in the long terms. I want them. I still have some of those older contracts that I'm still holding, so those are doing great. But watch Snapchat. I'm going to be watching them as well as Facebook. Even Google, there was some antitrust news after hours, but again, political advertisements, political agencies, or federal agencies, Google benefits a lot off that. So watch them. And then Amazon as well. They had the same, again, all of tech. And then a lot of people had their eyes on EA today. So watch out for them. And then finally, I'm going to be watching Abivai. We talked about them again for the long term. Still holding. Hopefully they don't do it. Snapchat doesn't goes up. But think ex-dividend. And what reminds me of that, because Coca-Cola, we have this in the long term. They have ex-dividend in 2 weeks. So I was thinking maybe we could add to that if I wanted to get the dividend and Snapchat's too high at the time for this month, and then I don't really get more Abivai. I might want to build around the Coca-Cola. I could even get it by ex-dividend, so we'll see. But going to be watching that. Again, TLT, just slow the game down. Don't you worry. The fact it's still holding up, and I'm going to be using that as a compass along with the yuan. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to be strong, baby. Don't forget, if you have to stretch something, hold something, that's getting strong, and it sounds like a budget, baby. So control the budget, control the balance, head in the game. Don't foul out, or at least be strong enough to survive till the end of the year, baby. We ain't even at the halfway mark, so I hope you're ready. I hope your head is in the game, baby. The coach loves you. I love you. I'm gonna see you in the morning. Let's go.